Good morning, it's Jeffrey Cohen. It's Monday, September 19th, coming to you live with the pre-action stock market analysis. We're currently in a confirmed bear market, and today will be no exception. Today looks like it'll be a very red open, very negative, lots of rising interest rates. Thursday afternoon is when the FOMC, or the Federal Open Market Committee, which is part of the Federal Reserve Bank, talks about their meeting that they had about setting policy rates, doing open market policies to change liquidity in the marketplace. And so this is the same organization that manages the banks. They also work very hard to manage the money supply. And so we're going to learn a lot on Thursday, but there's a long time between now and Thursday. To those who trade stocks, it'll feel like a lifetime. And so I want to walk through what's happening with the market. I wasn't sure if I should, because it's looking a little negative out there, but I figure let's jump right in. So, and by the way, we have a fund that we're setting up, and we're paper trading through it to make sure we know all the ins and outs of daily execution. And we will not talk about that on this video. We'll talk about that on a subsequent video. So let's start off with CNN Business has a fear and greed index. And I don't know that we agree with all the details, but in general, it's a very negative, bearish feeling. Market momentum, extreme fear. Stock price strength. I actually think they got this one wrong. It's not greed at all. Stock prices are low. Stock price breadth, oh my gosh, are they low? And actually bond price breadth is also low. How do I know that? Let's take a look at FinViz. And there, new highs, new lows. 28 new highs, 926 new lows. Let's look at bonds. 27 new highs, 2,102 new lows. So that's about 90 to 1. And in the stock market, it's 30, 35 to 1. Yeah, so we're very, very much negative breath. And so I could go on, but just CNN, fear and greed, it's probably a good like a funny little thing to look at once in a while, right? So what else you got? Jeffrey, what else is going on in the market? So 1 month treasuries, and I don't want to show them on the 1 day. I want to show them on the 5 days so you get some sense of a trend. And you see on Friday, the 1 month treasury jumped up to 2.6, and now it looks like it's trying to get ahead of 2.6. And so 1 month treasuries up. Let's look at the 1 year treasury. Again, 5 days, give you a little better feel for it. And you can see Tuesday it was down, and since Tuesday it's gone up. And it's here it's showing 3.8, but you can see it's been riding right above 4% on the 1 year treasury. The 10-year treasury note, again over 5 days. And here you see it's up. It's up 3.5%. It looks like it's just under 3.5% now. And the 30-year Treasury bond, no surprise, slightly above 3.5%. But what's interesting here is how it keeps trying to drop lower, 3.45, 3.46, 3.48. But it keeps coming back over 3.5. If we look at it over a month, you see this is just a continuation of an upward trend. If we look 6 months, yeah, so the long bond, 2.4%, 3%, 3.5%, you've got a trend here. And so interest rates going up is very bad for growth stocks. It's very bad for tech stocks and some other stocks that we're very interested in doing our own proprietary research on. So interest rates going up. Again, I'll come back to FINRA, and this is where it gets interesting. So you have a lot of bond issues, corporate bond issues that are trading at 52-week lows, even though the advance or decline was 3 to 5. 3 advances, 5 declines. But yet 52-week highs and lows. So bonds that were not doing well earlier, let's say in the year, are doing much, much worse. We follow one particular company. We follow Verizon. And for Verizon, we're actually seeing a strengthening of their bond prices and a lowering of their yield. What's interesting is we've been posting for days now that there are large dollar transactions in Verizon's bonds every day this past week. And so, I don't know, someone's buying up the bonds, and I think I know who it is. I think it's Verizon themselves, along with, investors. And they have extra cash, and so they're buying their bonds back at 60 to 80 cents on the dollar. Some of them 90, 95, the more recent ones. Yeah, it's crazy. So lower bond prices when you're a company with cash creates an opportunity to buy back those bonds at below par, which creates some equity valuation. So if we take a look at the futures, right, the S&P 500 is down 25 points at 3864. The Russell's down 0.2%. Nasdaq roughly 0.2%. And we look through, the VIX is up. So VIX normally means fear. It means downside, cost of downside protection. That's fine. Europe and Asia were pretty much all down with the exception of India and Jakarta, who we love. We love Indonesia. We've been there. Love the people. It's a small, kind of sleepy market. We looked at the futures. Yeah, maybe this is helpful. So the futures, the metals, gold down, silver down, but gold is down a lot more than silver. Silver actually popped back up again. Copper, it looks like a big deal, down 1%, but you're trading right around $3.50 pound of copper. Crude oil at 82.55 is lower, but not bad. Natural gas at 7.50, still pretty darn high. Gasoline at 2.35 is cheaper than we've seen, but again, still pretty high. So what's happening is I think your commodities, your metals are coming down. I think some of that inflationary fervor is starting to wear off, which honestly is just terrific. If we look at the Russell 2000, you see trending lower. This is when we talk about the market being down. You look at the Nasdaq trending lower. This nice little cliff here was great, little recovery, but really you're trending lower. And so just don't forget, you're trending lower in the markets. This is a down market. It's a bear market. You're in a bear market. I'm sorry. Just know it. We look at 1 month. I love Koi Fin. I guess another thing to point out, it's not a big deal, but it is a deal, is that you're watching all these stock prices and you feel like a real maven. I don't know about you, but I get in here, I got the futures. I'm like, oh yeah, let me tell you all about the futures. And, none of this data is accurate. It's not timely. So what happens is, I'm just going to show you. I think this is important. So we pay for a market data source from NASDAQ. When we do our videos, we show you the free stuff because it's free. Why not? I don't feel like we're violating any trusts here. But if we take a quick look at the spider pre-market, and we could take maybe one more. We'll look at the QQQ. The Russell, IWM. Just add a 0. And so if we take a look at these futures and I refresh, you're seeing 38.66. I'm seeing 38.31. 38.66. 38.31. That's a 30-point difference. That's like 35 points. That's almost a full percentage we're off. And then we look at the Russell at 1186, and here it is at I don't know how to do that conversion. It's not so simple. I think it's 1776 versus 1792. And so let's see, that's almost a full percent. And so yeah, I don't know about all these free data sources. I'm not loving it, right? If I go to FinViz, which I love, by the way, I do, although I'm starting to use it less. They have an advertiser on it that really had a disturbing ad that I didn't like. And so I've stopped looking at a lot of FinViz. I recommend some of their... No, that's not true. FinViz was fine. It was a different data source. But you take a look at the S&P 500 at 3864.50. We're at 3831.20. Russell 1791, 1768. So just the data's not right. It's not accurate. Don't make trading decisions on this stuff. Now, it's hard to pay for data sources. It's better when they're free. But just know they're not better. They're worse. They're free, but they're worse. And so I just don't understand why that happens. So it kind of throws me for a loop. That's all. So mortgage-backed securities. You know I love mortgage-backed securities. I do. I think they're very important to understand the value of mortgages. I'm sorry. I'm being kind of silly right there. So let's take a look at mortgage rates because, it's nice to know. Current mortgage rates, 6.35% for a conforming 30-year. If you go for the jumbo, more money to make, they're able to charge less interest rates because there's more money on which to make a margin. A conforming 30-year fix could be a $50,000 mortgage. So, but 6.35%, and they do a survey. That's high. That's high. And MBS prices are moderately weaker, significantly weaker today. That just flipped. Significantly weaker today. So, I'm not feeling good about that. Moderately weaker. All right, well, it's flipping. It's flipping back and forth. We're going to run a duplicate. We're going to come back. And we're going to take a look at the MBS market this morning. So take a look at this. That's down a lot. This is not a healthy market in the mortgage-backed securities. And you can see the treasuries, they're up. So when treasury yields are up, treasury bond prices are down. When treasury bond prices are down, you would expect mortgage-backed securities to be down more. Now, why is that, Jeffrey? Help me understand mortgage-backed securities, Jeffrey. So 101 here is you invest with mortgage-backed securities because you're bored with the yield on treasuries. Oh, I'm going to make 4%. Oh, terrific. What, you're going to have 100-to-1 leverage to try to make a little bit of money. That doesn't work that way. I don't have 100-to-1 leverage. Maybe I get 5-to-1 leverage if I buy treasuries. But typically, I have no leverage. But with a mortgage-backed security, you've got a basket of mortgages where when rates go up, the principal just isn't coming, right? Your interest payments will come. Oh, great, I made 4.5% or I make 5%. But you're kind of thinking to yourself, I'm kind of stuck here. I'm stuck at 4.5%, 5% when interest rates 3.5%, 3.5%. And the difference is this. When I lend money 30-year conforming to the U.S. government, it is considered to be risk-free at 3.5%. No risk. When I hold a mortgage, were those years? Yeah, 4.5% or 5%, and I'm not doing great here. I got a lot of risk. I have individuals, I have families with kids that may or may not have money to pay their mortgage. Now you can argue there's 100 of them or 500 of them packaged, but still, each individual mortgage holder is risky. Much more risky than a U.S. government. And so, mortgage-backed securities should be offering a lot higher interest rates. In fact, when you look at the mortgage rates and you see 6.35%, it just gives you a sense you should be 3% higher or 2.7% higher than the equivalent treasury. Your spread should be like 280 basis points. Not anymore. Not in this market. And so your mortgage-backed securities have to fall through the floor. They have to yield 6.5%, 7% in order to make anything happen here. And when you look at your mortgage-backed securities, a 5% at 100%, a 5% at 99.34, I just don't see it. I see these things are going to continue to drop. So not only are they down, but they'll continue to drop. And if we look at a 4.5%, which was a reasonable mortgage not that long ago, it's tough times. Look at this. If you bought these mortgages, let's look at June 27. It closed at 100.77. Now, it's at 97.44. So you're down at least 3% on your mortgage-backed securities in 3 months. That's tough. That's not a 3% annual. That's a 3% fall in 3 months. So that's tough, right? That's tough. If you hold mortgage-backed securities, if you hold treasuries. Now this is interesting. So look at the 30-year. Now, I don't know if the data's accurate, right? But in the last little bit of time here, you see 1 month up and down. You see 1 year seems to have hit lower, but it seems to be going up and down. The 10-year treasury's up. The 30-year treasury bond yield is down. Again, I don't know that you believe any of this kind of minute to minute because the data's not quite right. But you can see it. You can see the trend, and the trend is not that helpful. So what else do I have that we can look at in terms of data? I got a lot of things open. Maybe that's a lot of it for now. We'll stick with these. So 1775, 18. So you're down a lot. You're down a lot on your Russell. A lot. If we look at the S&P, 3830. You're down a lot. This is not a healthy, helpful day today. This is a market going down a lot today. And so, all right, well, so what are the names? What's kind of moving and shaking here? Maybe there's something going on. Let's take a look. Oh yeah, Bitcoin. Look at Bitcoin. There's actually a Bitcoin index. GBTC. It's not going to show it. Yeah, GBTC. It's a pink sheet. We won't be able to see it. Yeah, I don't have a Bitcoin ETF that I can show you. Otherwise, I would use that. Yeah, I don't have anything like that. That'd be nice, though, to have something traded on the markets. So let's take a look. Ethereum's down. I guess the merge wasn't so good for Ethereum. So these are all down. You can see the Bitcoin-related stocks are down. You know, our model stopped picking Bitcoin-related stocks, thank gosh. Except for one, except for SI. It likes SI, Silvergate. But that's it. Everything else is out. The model said, nope, too risky. So what else do we have here? I don't know that we have much. I think we're just going to wrap it up. Yeah, we'll hold our model stuff aside. You know, one of the things, I'm always amazed at how much data you can get. So, you know, we are long Verizon. It's trading this morning with a 14-cent spread. This is a 1-cent spread stock, so I wouldn't trust pre-market right now. That's a huge spread. And we showed you, and maybe I didn't show you so well, but maybe I'll come in here. So if you look at FINRA, the FINRA site, FINRA-markets.morningstar.com, and you come in here and you just say, you know, market data. And it'll show you how things traded. Right? It was a bad day on Friday for corporate debt. For agency debt, just as bad. It was about 8-to-1 negative. It wasn't quite as bad. But decliners, 116 to 169. Fannie, Freddie, a lot of new lows. So these mortgage-backed securities are not helpful. They're not helpful. Mortgage-backed securities, right? Consumer residential mortgages are looking negative. Okay? It's not helpful. But so you go to bonds, you go to search. Now there's a stock we like. Let's just use this one, SMLP. We're not in SMLP right now. Truthfully, I'd like to be. I just don't have a lot of cash, extra cash for my personal account. We're pumping our money into our hedge fund and pulling that money together so we can start trading our model. We've been paper trading it, which is pretty exciting. So if you look at SMLP, you have to understand the debt structure. So they've got some 2025 debt that they have to, I hope they can actually pay it off as opposed to refinance it. And then the 2026 debt will probably have to be refinanced. That's fine. There is no 2022 debt. And there's perpetual preferred. And so your preferred's trading with a 13.5% yield. By the way, they don't pay. They're just accumulating. At the 2025, you're trading at 86 cents in the dollar, which is 12.25 yield. And the 2026, you're at 96 cents in the dollar, so 9.7% yield. So you look at that. You can also go back and look at it trade by trade. Trades. And you can see last trade was on Friday. It's fine. 3 of them. And a lot of these, right, it means when they're just like this, they're the same. It means you're going through a broker-dealer. And so the broker-dealer had to offset your trade. If you see this and there's no broker-dealer, it's direct. My guess is you're looking at it. I did tab 2. So the reporting party is the seller. So the buyer did not comment, and it's just what it is. So you traded at 95.96 for the 2026s, 95.56, 96, 97 is all the same one. 96.4. Not a lot of trades. People trade. 98.5. Big trade over $1 million. So 98 and a quarter, 98 and an eighth, 98 and a half. And now we look, that same bond is trading at 96, 95 to 96. And so you take a look at that and you say, okay, the fixed income, the bonds are falling. They're becoming less valuable, less confidence in their ability to pay. I got it. that's not that doesn't give you a lot of confidence, right? And so if we take a look at Verizon in the same vein, it's a lot harder because Verizon has a lot of bonds outstanding. Verizon is like a poster child for trying to emulate the U.S. government, for having maturities, every year, every couple of months, whatever. They just have a lot of debt. If you look at it, some of the debt, you see coupon rate. So you see debt with maturing within a year is $12.5 billion. Some of that's private placement, some of it's commercial paper. Of course, commercial paper's got to be paid. You've got, I want to say that's Swiss francs, little tiny coupon rate, so who cares, right? Private placement debt's got to be repaid. That might be their ABSs, their asset-based securitized loans. Oh, man. So sorry. So what happens with the ABSs is they're getting a really great interest rate because the debt is secured by the phones people are buying. I buy a phone for $600. I take a $500 loan, then they're going to save 1 or 2% on the loan. I think that's great. And so, see how that goes. And then you see different debt now. Long-term debt. There's a lot. There's a lot here, right? And it's sorted by maturity. This comes right off their website, Investor Relations. And you can see I took the liberty of highlighting all the interest rates, the coupon rates, where they have to pay a coupon more than 4.5%. And you can see there are smatterings all over the place. Now, not a lot of this debt. These are millions. So 697 million at 5%. Yeah, I could hit some of that April 15, 40, 49s, September 50s, March 51s. But what they're doing is they're going across the maturity spectrum, and they're actually, it looks like they're spending millions of dollars every day, and they're just picking and choosing. I saw 31s, right? Those are low coupon, but they're clearing them out, right? What else did I see? 29s, I saw some, maybe they were hitting the 6.8s, right? They're just taking out bonds, and it looks like, you notice, they want to keep some debt at those maturities, so they're keeping $1 million, $2 million, $3 million, right? And they're picking away at some of these others. And so I just find this super, super fascinating, interesting. So if we take a look at this morning, 9:13 this morning, which is 7 minutes ago, according to my clock, my server clock. So 200,000 is probably not Verizon. I think they buy more during the day, but somebody decided to buy August 54. See if we could find it. August 54. It's a 5.01 coupon. There it is, 5.01 coupon. And they paid 95.17. So that's interesting. You could actually go through and say, what was the price? What's the latest price? And you start to see, though, that some of the prices have been going up because there have been a lot of large dollar trades over the past week, and it looks to me like Verizon is buying back some of their debt every day. They're picking and choosing because what happened was people felt very uncomfortable with Verizon, and I'll show you maybe why. They felt uncomfortable with Verizon, and so they bid down the price of the debt. That plus interest rates going up, so the spread. So if Verizon was going to keep, let's say, a 2% spread, that should mean that their 30-year bond should be 5.5. And a 2% spread in a 10-year means their 10-year should be 5.475. Right? And so that, and then you see they have all the maturities. And that should lay it out for you, right? And so I think what happened was interest rates went up. So Verizon's bonds went down. And all of a sudden, Verizon starts buying back their bonds. And that was that. And I think they did probably a couple $billion this quarter already. And life is good because they're getting, let's say, a 10, 20, 30% discount on their bonds. They buy them back. That's money right into equity right there. That's just like printing money. So I think that's great. I want to show you that because you could do the same kind of math with Verizon and with FINRA, and you can look for big purchases that were made, right? Let's see if I can find any big purchases made on Friday. There were so many of them. It's so frustrating to me. Sometimes I can't find them. So here, 3.6 million. It's August 46. So let's take a look at August 2046. There's two issues. There's a 4.13 and a 4.86. This is the 4.86. 3.6 million. Now look at that. They have 2.3 billion. So there's plenty of room for Verizon to be buying this one back. And they bought it back at 93,212. So they made 7%. And plenty of liquidity in that bond issuance right there. Plenty of liquidity. So they just go to the market and start to buy and start to buy and buy and buy. And let's see, maybe there's another one. I'm showing this to you because understanding Verizon, it's not just the stock. Right? We could look at the stock for a year and say, oh, look, it sucks. It was $52. And now it's down to $42, $41. And trust me, I don't like it. I think it's really low, and I think it should go back up. But then again, I also think Santa Claus should come every day, not just on Christmas. That's why I hang my stockings by the chimney with care every single day, because I just want Santa Claus to come, and I want to make money on every one of my trades every single day, and I want Christmas on September 19 so that my investments go up. But Santa's not coming. I'm sorry, kids. Santa only comes on Christmas Eve. And Verizon may stay at $40 a share for 6 months for all I know. How do I know? I don't know. But what I do know is this. They drove the stock down from 55 to 50 to 40. And then they drove the bonds down. And now someone's buying back the bonds. That's all I know. And I know that if Verizon can work in a collaborative manner in their industry against T-Mobile, against AT&T, and against Dish Network, and they can all boost cash flow, over the next year, they could buy back a lot of that debt they owe. And so can AT&T. And T-Mobile, fine. You're fine. You just do whatever you want to do. So I love it. I love this market. So I want to thank you very much for watching. If you like the video, give me a thumbs up, drop a comment, ask a question. I love it. I respond to questions. Hit the subscribe button. Really helps me. We do not advertise our videos. We don't monetize. We're not paid. We just do this to share our insights with you. It makes us a little smarter too, right, as we look through all the stuff. But it's really for you, the listener. So good luck out there. I wish you the best. I hope everyone that listened to this video today makes a lot of money today. Bye-bye now. Thanks.